Joining us right now, the co-founder of SageWorks, Brian Hamilton, is with us. The CEO of Scout Finance, Vivek Nasta, is here, and Fox Business Network's senior correspondent, Charlie Gasparino, with us. Good to see everybody. Thank you so much for joining us, gentlemen. Charlie, let me get your take right now. Your report on the IPO.
Yeah, this is interesting because, you know, I thought that last bit you did on Snapchat was an ad to sell it or to short it with those kids, because I think the problem with this IPO is that it's a company that's not making a lot of money. It's a company that's product is duplicated easily. And here's what we know about the IPO, that retail investors may be shut out of this thing, and that creates a scarcity of demand at the open. So buying into this thing could be very problematic. What do we know from people inside the underwriting syndicate? The retail allotment of this deal is a lot thinner than it was for Alibaba, for Facebook, for Twitter.
So there's not actually stock to buy.
Well, there's a few. And
to hit your point, 200 million shares are being issued, 150 are going to investment firms.
But most of it, and not just investment firms, the friends and family.
Right.
What they did was they took out from the retail allotment and put it into the friends and family. Now, is that necessarily bad? I think it's necessarily good, because you know why? If you're a retail guy, I don't think you want to come near this thing right now. But here's the thing: for a company that professes egalitarianism and, you know, we want to help the masses, in a sense, they kind of screwed the masses out of their IPO.
Wow. So you're saying at a 200 million shares, 150 million are off limits right off the bat.
Exactly.
Well, that's a good thing, definitely. I'm just going to keep going where you left off.
Tell us. Yeah, go ahead.
So to put this in perspective, Microsoft was 6 times trailing sales. A company called Google was 20 times trailing sales. These guys are 62 times trailing sales. Very similar to Twitter. Right. It's overvalued. It's unbelievable. It's a startup. It's 6 years old. And it's just a huge valuation. It's unbelievable. And they're losing tons of money.
But remember where it gets problematic for the retail investor. Because you are creating demand out of scarcity at the IPO open. So this thing's going to be free to trade at what time? You know, at some point.
9:30, 9:45?
Yeah, Maria, I'm glad the retail guys are locked out, actually.
But they're locked out now. They're not locked up after it's free.
Yeah, we'll stay locked out.
So in other words, once they're able to buy it, they can buy it, and then at that point they're probably buying an overvalued stock.
Don't buy it at 25?
Yeah.
I don't know.
It's priced at 17. Vivek, what do you think?
You know, I think one thing that we have to recognize is there's a cultish following to this company.
That's true.
Now, whether that justifies the valuation, I'm gonna leave the experts to it. I'm more of a tech guy, and I can tell you that the features on Snap, the user experience, the speed, the fact that you just take a picture and it goes right into your, into your stream, that workflow, that has created a resonance that might have staying power. I just don't want to underestimate the fact that there's loyalty to that.
Kevin and I just did it. We just took some pictures of each other, and I said to Kevin, so, this is what's all the hype about $24 billion. I mean, is that enough?
It's probably not enough due to the fact that it's easily replicated, and Instagram has done that. They're doing it in their WhatsApp section, but there's no international growth for them. That's the problem. They've been knocked off overseas.
I think you really got to ask yourself what makes them different.
Right.
What made them different initially is that, guess what? A bunch of college kids can take pictures of each other, and, you know, it disappears. Right? Insider traders can maybe use it, you know, to communicate.
It's on Google Cloud.
But you're right.
I'm not kidding you. That's what people spoke about early on when this thing first came out there. That was the utility. That's what set it apart. Insider trading and kids hooking up. Now, I'm sure they're beyond that now. You know the product pretty well,
look,
right?
But
still, you know.
Look, it's a fair point, but one thing you gotta understand is this is a world that's noisy. And Snap has a name. And even though Instagram, and even though, these guys are trying to copy, I can tell you from slaving in this business, to get a new concept out, even a copy, is almost impossible. First mover reigns supreme.
I got Evan Spiegel was brilliant not to go with the $3 billion takeout offer that he got a couple of years ago, right? Now we're down $24 billion. Go ahead.
I got to pull rank just a little bit here. I'm a tech entrepreneur, and it's amazing how we get away with a lot of just unbelievable logic. It doesn't hold. Look at this product. It's very trendy. It's only 6 years old.
It's not logic, though. You realize.
No, not at all. You and I are on the same team. But also, one other footnote, too. Guys, look at this. When you buy into this company, okay, you're not getting voting stock either. What's going on? It's not just the value, it's the whole
experience.
You know, it's this California thing. Hopefully they're not up yet, but it's getting away with not having any credence around economics.
$24 billion I
don't mind that they're going public, but it's the value. It's unbelievable.
And look at it compared to Facebook.
It's ridiculous.
Listen, I never thought Facebook was such a big thing because I was like, okay, who cares?
Profitable.
Well, who cares about like seeing your high school girlfriend or boyfriend or what? I mean, that's kind of like what it was used for. But remember, when Marissa Mayer got there particularly, they started monetizing every bit of data, and the user experience was more sticky. I go on Facebook, I sit down, and they can get stuff from me, and I interact. I don't interact well on Twitter, except for telling trolls to go, you know what, themselves.
It's weird.
And this, too. Is there an ability to monetize the user experience?
Well, I'm glad
somewhat ephemeral.
I'm glad you brought that up, because the problem is coming out 2 times the amount of sales, double the valuation on price to sales. The issue is also the data and analytics is better for Facebook and Google. That's who they're competing against. Advertisers actually haven't really taken hold, and they're worried about the model because they want vertical videos. They only have one demographic.
Why is that?
Do they hold and sustain margins when they're competing with folks like Apple?
User growth is slowing. That's the biggest issue.
And they're losing tons of money. Tons of money. By the way, on your point, remember, Facebook was making money, Google making money, Microsoft making money. Again, this company is losing tons of cash. It's unbelievable.
See, I don't mind that on a startup, but would I...